Alright, look at this Bitcoin chart with me for a second. See the zone up here? Notice how the price shot up, hit this exact area, and then reversed. That's not a coincidence. This is what I call a supply zone. And in this video, I'm gonna show you the tool I use to find these key spots where sellers tend to show up. The whole point is to give you a clear map of what's happening on the chart. It's not about predicting the future, but about understanding why the price might be turning around in certain areas. We'll break down these supply zones where sellers hang out. And we'll also look at the flip side, these demand zones down here, where buyers have shown up in the past. Let's jump right in. So once you see these zones, the big question is, what do we do with them? A lot of people try to trade bounce off these levels, waiting for the price to hit a zone and turn back around. And that's one way to look at it. But for me, I'm more interested in its strength. I'm rather follow the momentum. So I don't really look at the bounces. I want to see what happens when the price smashes right through one of these zones. That's what I call a break. And here's a quick tip on how I set this up. I just go into the settings here, turn off the retest signals, and turn on the break signals instead. That's it. Now instead of R on the chart, we get a B when the price moves cleanly through a zone. Let's go back to the Bitcoin chart. Here's a demand zone. See how the price eventually just fell right through it and boom, a little B signal pops up. For my style of trading, a break of a key buyer area like this suggests the downward move might just be getting started. And look, it happened again at this next zone and also at the one after that. But this leads to a really big problem. And this is the part that trips a lot of people up. Look at this right here. We get a B signal telling us the price broke down through a demand zone. But hang on. If you zoom out, the overall trend is clearly moving up. This is a classic trap, a signal that's fighting the main current of the market. And swimming against the current is usually a bad idea. So the real question is, how do we filter these out so we're not getting faked out by them? I'm gonna show you a simple way I solve that right now. There is where a second tool comes in handy. See this colored ribbon on my chart? Now, this thing can do a lot. We're gonna keep it super simple. The only thing we care about is the color. When it's blue, it tells me momentum is generally bullish. When it's red, it suggests the momentum is bearish. That's all we need. It's our filter. So let me show you how I clean this up. I go into the indicator settings. I change the sensitivity to 27. And then I turn off everything else. All I want to see is the ribbon color, nice and clean. Now let's put these two pieces together. The tool draws a supply zone. We glance at the ribbon and what we see is blue. So the overall momentum seems to be up. Then boom, we get a bullish buy signal right and the price breaks through that seller's zones. See how all these pieces of a story are pointing in the same direction now? Let's find another one. Here's a demand zone. We check our filter. The ribbon is red. That tells me the momentum is bearish. And look at that. We get a bearish breakout signal right on cue. Again, everything is lining up and telling one consistent story. But this right here, this is the most important part. Remember that trap signal from before? Here it is again. We get a bullish B signal. But look at the ribbon. It's red because the signal is fighting against the bearish momentum. It's exactly the kind of signal my strategy tells me to ignore. It doesn't fit the plan, so I don't even worry about it. By the way, for those asking, the tool that finds the zone is the Flux Chart's empty supply and demand zones indicator. And the ribbon I use as a filter is Fluxchart's SFX Algo Indicator. I'll drop a link for them for you in the descriptions below if you want to check them out. Happy trading and see you in the next video.